Our next section is on preparing for your audit. We've talked about common audit findings. We've talked about internal controls. We've talked about what an audit is and bookkeeping and important dates. And now we're going to get you ready to prepare for your audit. And to do that, we've got Glen Thompson. He's a certified fraud examiner, and he began his career with the APA in 1997 after graduating from Eastern Kentucky with a bachelor's in accounting. He's worked on several different types of local government audits, and he currently manages county audits for the office in 28 counties in northeastern Kentucky. Glen, if you want to go ahead and share your screen and take over, I'm going to hand the reins over to you.
Okay. Hi, my name is Glen Thompson. As Jonathan said earlier, I'm the manager of the northeast area of the state. To kind of give you an idea, if you drew a line down from Bracken County down to Estill County over to Perry and Pike, that's kind of my corner up in that upper corner that I cover. What I'm going to talk about today is, just some, this is not real high end stuff, but just, how do you prepare for your audit? I know we've got a lot of new officials out here, new bookkeepers, new magistrates, that kind of thing. And it's kind of just to give you a high level, what is an audit, how to prepare for it, and some problem areas that can cause audit costs to go up. Just when we get in there, issues that we see, if you can have these things corrected, will help your audit run a lot smoother. First off, I just wanted to talk about what is an audit and why are we there? The big thing, the monies that you guys and ladies are handling are taxpayer dollars. They're not your personal dollars. So thus the state, has regulations, KRSs, that has, the independent state auditor comes in and reviews that stuff to make sure that you're accounting for things properly. The reports, your fourth quarter reports and things of that nature you're sending into the Department of Local Government are correct. And you're accounting for those funds. It doesn't matter which office, clerk, sheriff, fiscal court, jailer, and other entities as well. But an audit it's a systematic process. You hear the term audit, but what actually is it? Well, what we're doing is I'm going to read a few things here. It won't be all reading, I promise. But just to kind of give you exactly what this is, I'm going to read a few things. It's objectively obtaining and evaluate sufficient and appropriate evidence, which is your documentation regarding financial statements and notes to the financial statements, which if you've ever looked at an audit report, I highly recommend in whatever county you're in, you can go to our website and you can pull down every audit report that we've released. You can look at, if you're a new official, you can look at the prior audits of your county or clerk, and you kind of see what an audit report actually looks like. There's a couple of pages there at the beginning, and then we have an audit opinion, like where we actually write a letter and describe what we think about what's going on. Then we present your financial statements, which are the money, the numbers. And then behind that are what's called notes to the financial statement. And what those notes are basically, they're given a little more definition of something that's going on in the county. Such we'll talk about debt. We'll talk about what type of retirement system you're in. And it depends on which type of audit you're doing. The fiscal court audits will have more notes than, say, a sheriff tax audit. There's just not as much to talk about on a tax audit, but that's what the notes are. They're just giving the public more information about what's going on. Also in the audit, we ensure the information in the financial statements, the numbers, for lack of a better word, and the notes that we just talked about agree and contain adequate disclosures. That's what those notes are for, is to disclose things to the public. We're going to communicate to the users. Who are the users of these audit reports? The public, for one, bondholders. If you're a fiscal court and you have a bond, the bondholders, they call our office sometimes asking for audit reports and situations. The legislature, on the state side, the legislator looks at our state audits. They can look at county audits. Also, federal and state agencies, like if you're a problem county with FEMA monies. FEMA wants to look at those reports to see what we're saying about a county, or it could be another type of grant. And state agencies as well. They look at those audit reports. And then there's other governing bodies too. But that's basically what an audit is an audit is we go in and test things, and then we issue a report. The report is the audit that we release. The rest of it is like a process of getting there. Okay. We audit for the state auditor's office. One section of what we do on the local side is what's here today is the county officials. The APA must annually audit the funds contained in each county's budget and the books and accounts and papers of all county clerks and the sheriffs, and that's the KRS there is mentioned. A fiscal court has an option to contract with a private CPA for their financial statement audit, but you must obtain permission from us first. We have what's called first right of refusal on fiscal courts if you get a CPA firm or not. And I won't get too far in the weeds on that. There's a process of that. The APA's policy, our policy is to audit a fiscal court at least once out of every 4 years. Now, there's fiscal courts we're in there every single year, and then there's audit fiscal courts that we may do just depending on our work schedule, workflow, things we want to do. There's a lot of factors in what audits get picked. And then also sheriff, clerk fees, tax settlement audits. Okay, preparing for the audit. What you want to do is you want to have your financial records, your documents and reports. You'll see this term in there several times throughout this presentation, is you want to be systematic of your process, like the way you keep your daily records, the way you reconcile your reports, the way you organize your filing system really needs to be in a systematic process. I've got a note here, as you can see, if you're systematic in your process and you're doing your daily, your monthly, your quarterly work timely, such as reconciling everything, you're pretty much ready for an audit at any time. There shouldn't be, like, if we call and say we need to schedule your audit, like, well, I need a month to get everything put together. Well, that's actually kind of a red flag for us, because you should really in your daily work be ready. Things are reconciled, your payroll's reconciled. Now we understand there could be an issue, like you might need you're taking a vacation or something like that. We understand that, but you really need to be systematic and be an accountant with your records. Okay, preparing for the audit. What generally happens? We will call generally within a week or two in advance notice. A lot of times on a fiscal court, we may call the treasurer. We deal with them more than the county official themselves, and we'll say, hey, we'd like to start your audit here in a week or so. Are you ready? And the reason we do that initial courtesy call is, one, if you're, say, the treasurer or the clerk and you're getting ready to take a vacation to Hawaii for two weeks, it may not be a good time for us to start that audit, just depending on the person that's taking the vacation and what we need. But we'll try to work with you best we can. Sometimes it gets to a point where we really need to, I won't say force a situation, but we really need to go ahead and get in there. And, if the bookkeeper's off for a week, we can still work around that situation as long as we have some bank statements, payroll records, fourth quarter report, any grant files. If we have that initial, generally we stay pretty busy that first week, just kind of going through things and putting stuff into our system for testing. But anyway, that initial call will be made, and you'll talk to a field auditor about who's going to do your audit. Okay. Big picture. And I know some of you all have never had an audit in your life, so we're going to go through a big picture. What is the overall process of this audit? The big picture, and we'll go through these a little more in detail in the other slides, but first you're going to receive that initial call we talked about. Then you're going to receive an engagement letter. It used to come 10 years ago, you would get it in the mail. Now everything's email. And the reason I have that highlighted there is make sure our office has your email that you use. Everything correspondence from us gets pushed through email now. So you just want to make sure everything's updated. Our staff has the email that this stuff needs to go to, officials, treasurers, that kind of thing. Get your docs ready. After this initial call, you're going to get your documents ready. If you've got documents down in the basement, underneath the bathroom, on, that kind of thing, you need to go ahead and get that stuff pulled out and be ready for us. Field work, during this initial week to 2 week time frame, like I said, you're going to get your documents ready. We have some counties that need a little time, just the way they store records, and then we have other counties, they've got everything scanned in, and they're ready pretty much any time. So it just depends on the county and the official. Field work, auditors will now, in these times, there's been a lot of technology advances in the last couple of years due to COVID. Just example, right now we're doing a presentation online. Our auditors will work both on-site in the county and off-site as well. Our auditors, when they do work, sometimes they're wrapping up another audit while we're working on your audit as well, and then we may be starting another audit as we're finishing yours up. So there's some on-site and off-site work that goes on. Level 1, after the field work is done, they've tested payroll, they've tested debt and that kind of thing. That audit gets sent up for what's called a level 1 review, and another auditor will actually review the field work of the auditors that you had to make sure it's just dotting our I's, crossing our T's to make sure that we haven't really missed anything that needed to be done in field work. After the initial review is done, we'll call it the field review, an exit conference will be scheduled. From that exit conference, there'll be we'll have a sit down and talk about things. Then you're going to sign a rep letter, sign copies of the exit, review financial statements and notes of the report, and respond to exit comments. And then after that's done, you've done your exit, then it goes up to a level 2 review, which is another higher level review. We're looking at report type stuff. And then once that level 2 is reviewed, it'll go into processing and it'll be released to the public. And the APA will send an email, a copy of the report that we sent to the newspaper, and it'll upload it to our website. Now I'm going to get into what goes on in the entrance conference. Basically, in the entrance conference, that's our first initial meeting with you. You'll sign that engagement letter like we talked about. We're going to talk about getting your fourth quarter reports ready. We're going to ask you like your reconciled bank statements, make sure they agree to your ledgers. We'll talk more about reconciliation here in a minute, what it truly means. Payroll records, receipts and disbursement ledger, and then once again, that signed engagement letter. Okay, in the engagement letter, that letter is basically that says, we're here to do your audit. You all will sign it. It comes from Mr. Harmon, official letterhead. And in that engagement letter, if you look, I think it's the third page maybe, there's actually a pre-audit package, and it's basically like a little checklist of things you need. It'll help you, remind you of things to get ready for us. And here's actually a copy from one from a couple of years ago. I think this is a 2019 or 2020 audit, but you can kind of see, it'll look very similar to this. About things you need. And I'm going to kind of get a little more detailed here. Typical records needed: bank statements, bank reconciliations, financial statements. That will be your fourth quarter report that you submit to DLG and that's signed by DLG. Service organization agreements. If you're not familiar with what that is, you may, depending on the county, you may hire a service like a CPA firm to handle all your payroll. Well, that would be a service organization, and we would need to see that agreement. There's a lot of payroll services out there nowadays. That's just the one off the top of my head. Fiscal court meeting minutes. We'll need to see all that. A lot of times that's stored in the clerk's office. But just to understand, like if something gets done in the county, those minutes, if it's not addressed in the minutes, It doesn't exist in our world. The fiscal court meeting minutes are the official record of the county of what's happened. Any ordinances that may have passed through the year for whatever reason, we would need copies of that. Your receipts and disbursements ledgers. Nowadays, I think everybody is, computerized system. Whatever system you use, make sure you understand that, how to use it. Payroll records, you're going to see a common theme of things we need. But you'd be surprised, we start a lot of audits and have a difficulty getting some of these records sometimes. Prime example, just in the last month, we've had a county that they said they threw away their bid files. Well, that's just unbelievable. But anyway, you need to keep copies of your contracts, your bid files, approved budget amendments. And when I say approved budget amendments, in your budget is the one that a DLG has signed off on. We've seen situations where counties think they have a budget amendment, but they never submitted to DLG for approval. Your official bonds, grant award letters, related documentation. If you get a grant for whatever reason, there will be those grant files. There'll be a packet that gives the details of that grant, and that can be very large to very small, depending on the type of grant and the dollars and the project and all that. List of officials. We'll need to know what officials are in charge of the county during that time frame. Your capital asset records, make sure they're up to date. If you had an addition, such as a new grader and a deletion of, you sold off a salvage dump truck or something, you need to keep that stuff updated. Any debt issuance documentation. If you had a new bond during the year or a new lease, you need to have all that documentation. CDR, you may have not heard this term before. CDR documentation, that generally ties to your bond. And that's short for continuing disclosure requirement. And when you sign up or sign and receive bond, you issue a bond is issued and you get the money. There's requirements that you have to have your audit reports released by a certain date, and every bond has different dates in there. And that's something we try to monitor because we try to get our audits out timely to meet those CDR deadlines. It's actually your CDR deadline. We're trying to help get the audit out and meet that time frame. Hold on. Okay. Public Properties Corporation. If you're not aware, your county may or may not have a Public Properties Corporation. If you do have one, they will have financial statements. You'll have bank statements for that Public Properties Corporation. From those bank statements, the treasurer or somebody should be preparing financial statements of what's going on with that Public Properties Corporation. Inmate records. This is getting into the jailers. Make sure your canteen reports are reconciled. Inmate accounts, canteen accounts, all your jail inmate stuff. We need to be able to, that should be ready for us. Monthly tax report. This is more for sheriffs. Monthly tax reports to districts for your tax audits. The CFA. The schedule of expenditure of federal awards, and we'll talk about that a little bit more later. And of course, invoices. Okay, the exit conference. Once we've completed field work and we've done our testing, we've looked at payroll and invoices and bid files and grants and got all your, did the field testing. Once that's all completed, on-site and off-site field work is completed and the review is completed, we'll sit down and do a exit conference on a fiscal court. It would be with the judge and the treasurer. If it was a sheriff's office, it might be the sheriff and the bookkeeper, same way with the clerk's office. We'll go over any items we have concerns with during our audit, like if we found some things that, are questionable or things we're going to talk about that stuff. And then some of that may be written up into a formal exit comment. And I think I heard Sherry say earlier, you get a 10-day window to make your responses, put thought into those. You're going to hear the term corrective action plan. That is basically, we say that here's what the issue is. Your chance to respond is how you're saying you're going to fix this issue. And we follow up with those. If we come back the next year, one of the first things we do is look to see how you resolve those issues. Okay, once it leaves, as I stated earlier, once it leaves the field, it, for lack of a better word, it comes to Frankfurt, and a level two audit, I mean, a level two review will be done. Uh, Sometimes we may have a question about something in the work, we call them work papers. That's our work. We may have a question. We may send back down to the AIC of your audit or whoever did your audit, and they may have to come back to you for additional information. It's not uncommon. Um, so don't let that scare you if like you think you're done and then all of a sudden you're getting more questions. I mean, it's just part of the process. The audit's really truly never done until we release that audit report. Let's see here. Okay, common areas that reduce audit efficiency. If you can improve on these things or reduce this stuff, it's going to really help it's going to help your audit flow through the process of our testing. Things we see that really cause us a lot of problems and slow down the audits and cause audit costs to start getting higher. You need to understand what a reconciliation truly is. If you are doing a bank reconciliation and you're checking off that the check's cleared the bank and that bank statement agrees to your cash in the bank, that's really not what a reconciliation is. The reason you keep all these ledgers and this computer system, you're actually tying that cash balance. Once you make sure all your checks have cleared and all your deposits, you've checked those off as clearing. When you come down to that cash balance number, let's say it's 150,000 in general fund at the end of May, that needs to agree to what's in your computer system. That's when you're reconciled. Now, if you've got 160 on your computer system and 150 on your bank statement reconciled, you're off $10,000. So that's where the work goes into. You could have forgot a deposit or what have you, but that's what truly reconciling to your ledgers means. We see a lot of times where people aren't doing reconciliations at all. They're months and months behind. That's not a good thing. Let's see here. Also, this would apply to like canteen accounts, your inmate reports. They need to be reconciled to your bank statements. So if you have $200,000 in your canteen account at the end of May, that should agree to your reconciled bank statements to $200,000. If it doesn't, you're off. Okay, payroll account not reconciled. This can be for whatever reason we see this a lot. You need to understand what a payroll account is. A payroll account is what's called a revolving account. It is what gets put into that payroll account is coming out of there in a very short time frame. So let's say you put $100,000 in there to cover the payroll for this period. You got retirement, you've got tax withholdings, you may have child support payments sitting that you've pulled out of an employee's check. Those amounts within the next month are going to be out of there. So your payroll account at the end of each month, you should have that like when you do your reconciliation, you should be accounting for those things that are still in there that are going to be going out real soon. So that's once you back out those that are going to go out, your payroll revolving account should reconcile to zero each month. We see a lot of counties that may have $30,000 and they don't really know why or how. It's been in there for a year or two and they just don't know what has caused this, and they have to sometimes you just have to start over with a brand new payroll account and see how it clears out. But anyway, we see a lot of issues with payroll accounts not being reconciled properly. CFA. If you haven't heard that term, that's your schedule of expenditures of federal awards. It could be FEMA, it could be CDBG grants, it could be abandoned mine land grants, it could be in CARES Act, ARPA monies. All that is federal money. So you need to prepare a CFA that accounts for all the grant monies that you've dispersed over the year. you actually are supposed to send that CFA in with your quarterly report in June. For your June 30 is what I mean. Your numbers need to accrue, the numbers you put in that need to tie to what's on your ledgers. And here's a big one we see: workforce labor for FEMA. If you're charging workforce labor as part of your match on your FEMA, I think it's 12%. If you're using workforce labor, your payroll records need to justify that you're, like, if you're charging that workforce labor, the first thing we're going to do is going to look at that workforce labor number and ask you to, for you to show us how you come up with that number. It just can't be pulled out of the air. You've got to have support. It's got to back up to, your employees' payroll. CFA, let's see. What have I got? Just a couple minutes. Is that right?
You can go as long as you need to.
Okay.
We will take care of it on the back end and make sure we're good to go, but it's all important information, so take your time with it.
Okay. It's hard to time these things for you all that's never done a presentation. CFA, what goes on that? You're on your CFA report, and you can pull audits from our website. Once again, like you think of a big county that we get a lot of money and get a single audit constantly, you can go and look at what a CFA looks like with them, or you can call our office and we can help you there too. But it's going to list, when you get these grants, you're going to have a federal agency that the money come from, the state agency that the money ran through. You're going to have an assistance listing number, also formerly known as CFDA, and I'm an old dog and I still call things by the old stuff, but used to be called CFDA. Now it's called an assistance listing number. The name of the program, the name of the grant ID, it actually has a number, the amount awarded and the amount expended. That's what goes on your CFA that ties back to your ledgers. Now, for the clerks and sheriffs, you all don't see a lot of that. This is more of a fiscal court thing, but I have heard of sheriffs getting borderline to getting a single audit, so just to kind of take note. Okay, problems we have with public properties corporations: maintaining the receipts and disbursements ledger of those corporations. A fund will be included in the financial state for those activities. Those funds, those public property corporation funds, your bond actually has bank statements with inside those. So for some of the traders out there, you may see bank statements from like Bank of New York or US Bank or things of that nature. That's a bank from outside your normal world. That's probably public properties corporation bank statements. Know how much debt is attributed to your public properties corporation. Make sure that's reported on the fourth quarter. In those bank accounts, like I was talking about earlier, like your Bank of New York type things, generally in a public properties corporation, you're going to have a sinking bank. They call it a sinking fund, but it's a sinking bank account, a construction bank account, and a cost of issuance bank account. You need to be accounting for all those. Generally, you see all these three when there's the construction is going on. The sinking will be around until the bond is over, and what that sinking money is money that the bond holder sets aside. It may have like $200,000, $300,000, $400,000, $500,000 in it in case you happen to miss a bond payment. But please don't do that, because it causes all kinds of problems. The bond holder actually has that money is in reserve that they could make that initial payment. I have been in a situation, worked on the audit once, where a bond payment was missed, and I'm telling you, you may get calls from way up in Frankfurt if you miss a bond payment. Fiscal court would show assets for construction. Like if you're doing the construction, if you're building the courthouse or whatever, there's going to be, there's going to be stuff, invoices and all that through that phase as well. Now, here's one thing is, you may not have a public properties corporation anymore. Those were created, I don't know, 15, 20, 25 years ago when counties couldn't borrow debt in their own name. But now, when you read, a lot of counties have refinanced, and the bond is actually now just in the county's name, and the Public Properties Corporation or Justice Center Corporation may have gone away. But keep your bond documents, and you should, they'll tell you that information, and we can help you. Okay, canteen and inmate accounts. If your canteen is run by a third party, which a lot of them are, and they use vendor software, you need to understand how that software works. If you don't, please contact your third party software system and understand how that system works. Things we need out of that canteen system, you need to be able to run reports as of dates like June 30, that as you know, for fiscal court, June 30 is your end of the year. So you'll need to run reports from that date, on that date to that's your ending balance as of June 30. Also, you need to be able to run reports. Let's say we're in there doing an audit 6 months later, you should be able to get in there in that system and run reports as of that June 30 date. Sometimes we've had issues in the past where they can only run, they call them like perpetual reports, only as of that day they print it. And that's, it's not good for an audit. We already talked about the debt quite a bit. Just make sure you have all your debt and lease agreements. Like if you get a bond, we need that documentation. It's over my career. There's been a lot of times we walked into counties, they got a new bond and they don't have any paperwork in the courthouse about any of it. And honestly, they don't even know what they've signed sometimes, or how it all worked. Sheriff tax collections, make sure your monthly tax reports agreed amounts paid out with, without explanation. Sometimes, you can have a monthly tax report, and there could have been an error for whatever reason, could have been a refund. You just make notes on those. If there was, for some reason, your check that you wrote to that district does not agree to the amount on that report, make a note on that report what the issue was. That's just leaves it what's called a good audit trail for us to review it. Here's a problem I've seen over my career: tax bills that go out to the public with the incorrect rates. That causes, I would ask the sheriffs, the PVAs, and the clerks, somebody in that courthouse, to make sure that tax bill before it goes out, to recalculate it and make sure those rates are in there correctly, because it just causes all kinds of problems if people start paying the wrong amount, because those amounts, if you're over collecting, that's all due back to the taxpayers. And you can imagine the nightmare that can cause trying to get those refunds back and sending out all those checks to all those people. Franchise bills that are for the clerks and the sheriffs. Always, when you get a franchise bill, just double check, you make sure that the assessment that was sent to you for what year it was in, make sure that tax bill is calculated on the proper year, because some of these things come in and you're actually billing for prior years, and make sure you use those correct tax rates. Delinquent taxes for clerks, make sure your monthly delinquent tax reports agree to the amounts paid out. I don't know why it says do not there. That's incorrect. So make sure they do agree. And then delinquent taxes, it's another issue we find is the sheriffs will continue collecting after they've been turned over to the clerk for whatever reason, and that causes a lot of headache as well. That's things that can slow your audit down. So once those bills get turned over to the clerk, that's it. The sheriff no longer collects. On the franchise taxes, clerks, make sure your certifications are going over and processed so the sheriff can collect. And the sheriff and the clerk really need to work together on that. Jonathan, I'm just about done. Just a side note for all you bookkeepers out there in the county: if you walked in the morning and your computer was dead, what would you do? I've seen this scenario happen in the past, and it is a huge monstrosity of a problem trying to get data back. I've seen treasurers just cry because all that information is lost. So please talk to an IT person and make sure your systems are being backed up. You should be able to shut down if that laptop was dead by the end of the day or next day, have a new laptop and that data reloaded into your laptop, and you're just cooking again. I've seen treasurers it's taken them months to put that stuff back together. It can be a nightmare. So if your laptop did not start up in the morning, you need to talk to an IT guy or person about what to do. Okay, great resources for you, all the new officials out here. Us, the auditor's office, we're not regulators, but we can a lot of times point you in the right direction. Let's say you've got a wage issue or how to pay somebody. We can point you in the direction of wage and hour, for an example. Department of Local Government's a huge asset. Your associations, your judges association, clerk, sheriff, magistrates, you all have associations. Talk to those people, get involved. And a lot of times if you're a new clerk and you're not sure what to do, you can call your association and they may even send somebody over there to help you for a week to get off the ground. CAECO is a good resource, and also your ad districts. Key takeaways from this: please use a systematic process. Understand how true bank reconciliation works. Understand how to operate your computer systems, and have a solid internal control environment, because at the end of the day, we all want clean and efficient audits. We want to get in, do our work, and then get out of your all's hair and then go on to the next one. When we start having problems, that's when things get drawn out and that kind of thing. So, Jonathan, I think that is all I've got.
All right. Well, thank you, Glenn.